Now we look at the economic segment. The economic segment answers the what question about every transaction. What is the nature of the transaction? The economic segment of the National Chart of Account has 8 digits split across 5 levels. The top level is the account type, then the sub-account type, account class, then the sub-account class, and finally the line item. All transactions are recorded at the line item level, and these amounts are then rolled up through the levels all the way up to the account type. At the account type level, there are 4 broad classifications in the economic segment. 1, revenue. 2, expenditure, which is the outflow of funds to expenditure. 3, assets, which is the stock of assets. And finally 4, liabilities, which is the stock of liabilities. Revenue broadly refers to incoming receipts within the state level PFM in Nigeria. This will typically be as follows: Federation accounts revenue, which includes statutory allocation, derivation, VAT, and other federation accounts revenues. These are classified under the sub-account type 1.1. Next, independent revenue or internally generated revenue. These are the tax and non-tax revenue that a state government collects within the state. These are classified under the sub-account type 1.2. Then we have aid and grants. These are usually from federal government, international development partners, and charities alike, and are classified under sub-account type 1.3. Finally, we have capital development fund receipts. These include loans, for example, loans from banks, issuance of bonds, loans from development partners like World Bank, ADB. Some other receipts are recorded here, for example, the sale of government assets or ad hoc receipts that cannot be classified under sub-account types 1.1, 1.2, and 1.3. Loans and these other receipts are classified under sub-account type 1.4. Expenditure broadly refers to outgoing cash within the state level PFM in Nigeria. This will typically be classified under 3 sub-account types. Firstly, personnel expenditure, which includes salaries, allowances, social benefits, for example, pension and gratuity, or social contribution, for example, health insurance contribution, contributory pension schemes. These are classified under sub-account type 2.1. Then we have other recurrent expenditure. This covers overhead costs, grants and subsidies, transfers, and debt service. These are classified under sub-account type 2.2. It should be noted that the major component of other recurrent expenditure is the overhead, which is the operations and maintenance cost of running the government. And finally, there is capital expenditure. This relates to all expenditure to procure assets, both tangible assets like cars, roads, buildings, and intangible assets like human capacity or human capital development. These expenditures are typically classified under sub-account type 2.3, although in some number of states they use 3.2 to classify capital expenditure. In the next video, we will look at the functions and fund segments.